Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. This belief card is unknown, meaning the writer. Dare to believe. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We get the Dow Industrials down 197, NASDAQ off 21, S&P's down 12.5, gold contract off $3, trading at $1,222 an ounce. Silver, flat at $17.05. Platinum down 10 bucks at $1,229 an ounce. Light sweet crude getting smoked again, down 225. We're at 57.70. We're going to get back to that because we know that that 54.45 number is a huge number, folks. You get into that number by $2 or $3, that means that light sweet would go to 35 bucks. Mind blower? No doubt. Bond market. Ever-ready bond market, folks, just won't stop. You get the 10-year up to 23 ticks. 127.20, wide price spread, accelerated volume, all of the above. That baby is going higher. 30-year is up a point and 9 ticks. Monster move. 145.12. Both of those are going to the highs of October 15th. I suspect we're going to go a lot higher than that, too. King Dollar. What did King Dollar did? Okay, so King Dollar gave it up. This is subtle, no doubt. So we're down 362 right now in King Dollar. When we go, what it's going to do on the continuous contract, it's going to close under the highs of last week. That sets up a pullback. Market cannot stand the dollar going down right now. It's pretty wild watching the correlations, and it's tick for tick. Euro is up 43, trading at 124.54, and the yen is flat at 118.63. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay. We're at 1217. We've hit 1212. The 1212 brings you right at the highs of September. That's bottom line. That's where you're going to find a little support. If we look at the SPY, do that correlation inside the SPY, what you're going to see is this. The SPY has already done 132 million shares. 159 is the swing point it's taken out. You know, we'll see whether they do another 20. It's going to be hard to do 27 million in an hour. It could, though. Bottom line, you do that, you get confirmed ABC structure on the way down. You're breaking down. You are breaking down with expanded volume. We're 202.47. Bottom line, next stop is down to 201. Dow Industrials. What happening in the Dow Industrials? Dow Industrials right now are down 195 bucks. We are at 17,401. This is making its way down to the 17,350 area. Inside the Dow, and this is going to be the big one, folks. You get IBM. IBM, you know, we're talking about the cause that's been building. Well, that cause, it broke today. Down 546. Basically, it's taken out a swing point, accelerated volume, all of the above. And what you have here is this. You're at 155.59 in Big Blue. That's nothing. You haven't seen nothing yet, okay? Bottom line, this thing is going to go nonstop down to 116 because it's sliced and diced. It had a shot at 157.14 to hold. Guess what? Didn't hold. This thing is 116.80. That is going to basically put a monster pressure, selling pressure, continually on the Dow Industrials. Taking it down today is that IBM is the leader, taking it down. DuPont is second. DuPont's down 191. You go Goldman Sachs down 444. ExxonMobil is off 197. Walmart is up 51. You get Disney up 43. Microsoft is up 15, and Big Mac is up 27. Now, Big Mac is a dead dog also, a dead dog in an extraordinary way. Gold contract. What do we have with gold? Bottom line, they can't knock gold down, folks. Gold is building cause, and next week you're going to see some price action in a big way, I suspect, because what we've done now, we've built a much larger A to B leg. It looks to me like you got, if I put this on a continuous contract for a second, it looks like we got a monster ABC structure on the way up here. If we put this on just a weekly, what you have is this. You're at 1222. This thing is building cause to get up to this 1346 area. That's on the weekly. That's a big number. That's the bottom line. Bonds. Bond market, pretty amazing, no doubt. Bonds, we look at the 10-year first. The 10 years down now, 1.4 million contracts out here today. We're at 127.18. The bottom of the October 15th bar is 126.21. The top is 129.28. We've hit 125.25 today. That's going to the top. We've done 1.4 million contracts. 1.4 million contracts has just taken out the swing point from 127.15, which was generated on October 1st. October 1st, we did 1.418. Right now, we're at 1.411. We're going to have the volume taking that baby out. The 30-year, which has been doing the heavy lifting all the way up, the 30-year is just yanking everything, meaning rates lower. 30-year is the rocket ship. 30-year is up 1 full point and 7 ticks. We have 413,000 contracts out here. It took over the swing point. The high of the 30-year is 146.16. The thing that's amazing, okay, is that this 146.16 more than likely is going to get blown away, and more than likely you get a much larger ABC structure on the way up. And if that's what we have, so check this out. 134 is your A, 146 is your B. So you get 12 bucks. That's going to bring you to 150. 138 is, so 150 is game now. And if we go back and you want to take a look at this 150, this is where it's going to get really wild. So I'm going back on the continuous contract. You got to remember that number 150. When we take a look at where we are right now, 153.11 is the high that was generated in July of 2012. That's where this thing's going. It's going to go up there, it's going to attack that level, and we'll see whether it can take that level out. That's the first part. Second part gets more intense, and the intense part of the second one goes like this, because watch this. This longer-term deal is about as intense as you get. And what it is this. There's a larger ABC structure that is out here. It's 105 up to 153. So I'm just going to say, okay, so we get let's say that's 48 points, right? You see is 27. So you get 48, 58, 68, 77. That would be crazy, folks. But that bottom line is that as we get up to that B point, that would set up, what did I just say, 177? 177. Man, oh man. The 10-year rate right now is 2.096. And if you want a mortgage out there, folks, go make those papers out over the weekend, because the bottom line is that you're going to see 30-year mortgages out here at 3.9. Not bad. King dollar. Okay, so King dollar. What do you have with King dollar? We take a continuous contract. We put King dollar on it. We are at 88.35 right now, and what you're going to see is that a close under 88.51, I believe it was. Yeah, it's 88.51. We're going to close underneath that. Now, what that sets up is this. It just sets up a pullback. You know, we don't really understand at this particular point how far it wants to pull back. It's always hard to understand how far something wants to pull back anyway. But what you do have is this. The first place that a normal pullback would get you to is 3 points lower. Actually, it's 4 points lower, which is a decent pullback. How we pull back, meaning do we have volume off the high in that pullback, would bring the probability higher that you get a larger pullback. But for right now, bottom line, that's what it wants to do. Those correlations, those direct correlations, just dollar, gold, bonds, market, they're all in harmony. And if you think that our markets right now are down bad, folks, it's not even close. Because the bottom line is that with the Dow being down 200 bucks, it's only down 1%. The NASDAQ is down 14, that's only down 0.7%. The NASDAQ is down 24, that's only 0.5%. Europe, across the board, folks, was down 2.7%. Get your stops in, and if you think you're going to sell something, sell it before Monday, because Monday, Tuesday, Wednesday is not going to be pretty out here. You stay right there. We'll come right back, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials are right now down 196. Nasdaq's off 22. S&Ps are off 13. And don't forget, folks, at TFNN, every trading day, we do 10 hours of live programming. Get it right on your cell phone, TFNN.mobi. If you'd like to get Tiger TV, which you get the TV with the audio, the visual, the charts, the whole ball of wax, just go to TFNN.com and then hit the Tiger TV in the top right-hand corner. As you're over at TFNN, what you're going to see right in the carousel, folks, is celebrate the 660th edition of the Gold Report for only $10 a week. This coming Tuesday is my 660th edition of the Gold Report. We're doing a special. You can get it 50% off. You get 60 editions for $600. If you take advantage of that special offer, what you also get is you get a copy of an autographed copy of my book, The Art of Timing the Trade, which is an $88 value. You have from now until next weekend to take advantage of that 60 issues for $600. Let's go over to Europe. Okay, so what is unusual here, folks, is this, is that number-wise, because we're at such large numbers, 200 looks like a lot. Well, 200 down on the Dow is only 1%. When we go to Europe, you had the FTSE down 2.5%, the CAT down 2.7%, the DAX down 2.7%, Spain was down 3%. Those are big numbers, folks, and don't think for a second that we're not going to follow them. Because what we have here now is this. I've been talking a lot about October 15th swing point. The October 15th swing point has just been hit. And the DAX, and the FTSE rather. The top of that is 62.82. We hit 62.97 today, and it's down there with juice. On Monday, the DAX is going to blow this baby away. Because what it's done is this. It's hanging right on top of it. That's where it stopped today. In fact, it stopped, 6782. See, and it stopped at 6282 rather, and it stopped at 6297. Bottom line, it's going to blow that baby away. If we go over to that's the FTSE. We go to the DAX in Germany. DAX in Germany made hay out here today. DAX in Germany's been holding up at its highs. DAX in Germany goes south 267 points. That has a long way down, meaning the 86 on the way down. So that little baby does have a long way down. Let's go to Janet in British Columbia. Hey, Janet, what's going on?
Hello, Tom. How are you?
I'm doing great. How you been?
Oh, good, thank you. Good, thank you.
It's great to hear from
you. These markets are just a mind blower, just unbelievable. And I listened to Steve this morning, and he said he was going to be pathetic or prophetic, and he was still hoping he was going to be prophetic, but I had to laugh. I'm long the VIX, actually the UVXY, and this thing will go up and down as you blink your eyes. So
yes.
I've got a little bit of profit now, and I wondered whether to hold that over the weekend till the beginning of next week, or whether to just get out now with a bit of profit.
Okay, let's take a look at it. So what we're looking at is UVXY. That's the ProShares Ultra VIX Short-Term Future. It trades at 200% performance of the S&P 500 VIX. And so you're at, and what happens with this is...
Sorry, I was going to say it's up above its 50-day moving average, and it looks like it's got a bit of a bullish hammer today, but...
Well, okay, so what happens, just to clarify the hammer aspect, a hammer, what happens is that a hammer has to be at the end of a downtrend, okay?
Okay.
That's really just not a symbol today, but that's cool.
Okay.
I would stay right there. And now, what happens here, folks, is this. What you hear enough, these are daily investment vehicles. So the bottom line is that you're supposed to be out of them at the end of the day. If you get the trend right with them, they can explode in price very quickly because they compound on the way up. So what ends up happening is that they'll recharge again on Monday morning, and they compound the number. And that's why when you get to a number like we have here, 28, that can compound very quickly, up or down, both ways. But the way this VIX is set up is it wants to go to $44. So that's, I suspect you're going to get a test of that $44, Janet. And
on this UVXY?
Yes.
Oh,
yeah.
All right.
Yeah.
Perfect.
Yeah, totally. Listen, I guess that, I appreciate you as a tigress listening to us for so long, but it was not but what what I absolutely love is that you've picked up the Boston slang, mind blower. That's beautiful. I love it.
Yeah.
Seriously.
Oh, well, Well, thanks.
That is...
And I was also, just if you've got the time, there was a reading an article on Yahoo, and this fellow felt that to keep it short and simple, he had 52 times that the market had been up at the end of the year if the VIX was up 41% above its low for the month, and it was on December 9th, and he says that the S&P should be at 2059 by the end of the year.
Oh.
And he said that this has never been wrong. It's been, but he said there's always a first time. So I guess this is the first time coming up, is it?
I always inside the marketplace. It just depends on how far you can go back statistically as to something is wrong or not wrong. Do you know what I mean?
Yes.
The market's very good at getting people wrong all the time.
Yes.
Yeah, totally.
I'll say, including myself.
Including all of us. That. If you start with that basis, folks, you're going to be much better off basically taking money out of the marketplace. You know, I mean, if I could tell folks one thing, and I've had a choice on one, it's like when you have profits, take them, period. And I know that sounds simple, but guess what? It's not simple, folks, okay?
No.
And then you just don't look back, and then you do it again. Because, see, if you can do it once, you can do it again. That's what it comes down to. But it's taking the profits.
Tom, do you think there's any chance the S&P can be higher at the end of the year?
No, I think we're toast. And in fact, what you have here is this. Well, we know there's a chance, that's for sure. But what you have out here is this, folks, okay? The longer term, there's heavier problems than this, because the longer term trend on the S&P, okay, had broken, and it had broken seriously at the October swing points when it came down, because it came down with accelerated volume, you broke it, and that... I can make the case that we're going to 1340 on the S&P, and we're at 2,000 now, folks. That's at 13,400 Dow Industrials. Then what ended up happening is that it went back inside the range. Well, by the end of today, that's going to be back outside the channel. That's going to be a major failure. So that sets up, first off, it sets up a test of the 1820, which was the low of October, and that's short term. Longer term, that sets up a test of it down at 1,300, 1,340. And that's insane. But guess what? If you look at the oil market, as I said the last few days, folks, okay, the bottom line is that if you happen to be in the oil market, and we did that correlation inside the S&P, the Dow Industrials, that would be like the Dow Industrials coming down 7,700 points in 11 months. People would be going out of their minds. Mm-hmm. Have a great weekend, Janet. Have a safe weekend.
Have a wonderful holiday season if I don't talk to you.
Ho, ho, ho. So Merry Christmas. That's right.
Ho, ho, ho.
It's a beautiful thing. You stay right there, folks. We're coming right back. Thanks so much. Dow down 212, NASDAQ off 26, S&P's off 14.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. EverBank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
276-648. The Dow right now is down 246. Nasdaq's off 35. S&Ps are off 19. And that S&P, folks, okay, this is going to be a nasty coming into this close out here. What you have is that, as I was just talking about, of course, is that you have Europe down dramatically, over 2.5%. We were down nothing, okay? Bottom line is that the S&Ps, they just broke out the bottom of the S&Ps, and that's a lot of time left. It's going to be like the trading places. Turn off those machines, because bottom line is you just blew out this low, and, you know, we're down 20 S&P points. That can be down 27, 30 S&P points in a heartbeat. In a heartbeat. Let's go to Mike in Toronto. Hey, Mike, what's going on? We must have lost him. How about David in Lakeland? Hey, David, what's going on?
Hello.
Hi.
Hello.
Hi, Mike. How you doing?
Yeah, hi. I'm calling from Toronto.
Yeah, it's a beautiful thing.
Yeah, hi. Thanks for taking my call. Yeah, I'm short the crude oil. I've been short since June.
Okay.
And it's via the DTO. And
DTO?
I noticed that the DTO, they every month they adjust the leverage ratio, and it's about 2 to 1 right now. And I was wondering, you keep mentioning the high point of the low monthly bar from December 2008 as a possible bottoming point for the crude oil, which is around 54.66, I believe.
Yes.
Are there any clues? Like, can you go onto that Bloomberg terminal there and access level 2? Like, do you see any big blocks around the 54.66 level versus, say, 53.50, which is a 50% retracement of the 107 high from June?
No. That what happens in the futures contract that won't it doesn't calculate. What happens is this. Okay, so if we go over right now, this just has to do with when you get smoked like this. Period. What you have is that you're looking for
capitulation.
No, I don't believe they capitulate. There's people that Rick Santelli thought that the bond market capitulated going up October 15th. That's not even close. Okay, we're not even close to capitulation. Capitulation in the oil market will take oil from 50 to 32, like in a day. That's capitulation. This is flat out oil's going down. So
yeah, but
we're at 57.63. How we come into 54.62? If you get a rejection there, then close up that DTO ASAP, man.
Yeah. Okay, I'll be looking for big blocks coming when it comes down to that level. Okay, that's one of the clues I see on the DTO and on the SCO are big blocks. Okay, but the point is sometimes they in the what do you call it, before market or the after market, they like to probe that 54.66, right? So I'm thinking maybe 53.50. Okay, because there's a 50% retracement, even down to 52.50.
Listen, the way that the oil market is trading right now, I suspect it's going to basically blow through that $54.
Wow.
Because that's too easy. That, you know what I mean? What happens, folks, that's any technician knows that that's hanging out there. That's the highs of the low. So it's like, okay, that's hanging out there. So it's like, that's too easy to say, okay, it's going to bounce off it. But, you know, you wait to, if you're trading it, you wait to see what happens at that point. And that basically tells you.
Okay, how about another one? CPG. Crescent Point Energy on New York.
Don't even think about touching it. That's the low is today 18.38. The high is 44. These stocks are going to get killed, and you know there's nothing here in this stock, man. You know I know
you can't possibly some targets, some downside targets.
They take $1 billion in. Yeah, you're at $18. It's going to go after its low of next low is 14.30, right?
14.30.
You know, this has volume off the high, man. That's why I wouldn't touch this thing. You can see on a monthly basis, you hit a high of $44 in July. You did that with 1.9 million. Then you come off that high with 2.2 million and then 3.7 million. And this month, we're not even, we have another, what's the, we have another 10 trading days. We're already at 3.2 million. Big numbers, man. Keep your hands in your pockets. You're going to be able to get oil, you're going to be able to get oil cheap, but it's not yet.
Okay, thank you.
Okay, man. Have a great one. Have a safe one. And what you're going to want to do, folks, there's no doubt, if you like the oil market, right, the bottom line, just keep your hands in your pockets right now. What you're going to get at the bottom, and is close to the bottom, is this. You're going to get folks turning around and saying that the bottom line is that the oil market's dead, that we're going to have cheap oil forever, okay? You're going to have all of the above happen. And you know what? I don't think that that's going to be the case at all. If we go over to an ExxonMobil, now don't want to buy ExxonMobil yet, but the bottom line is ExxonMobil is not going away. If you like a longer term, you got an IRA going on, you want to be long, you have to be long, whatever that is, cool, okay? You're at ExxonMobil's 86. Guess what? It's going to run down to 77. How we hit 77 is going to tell you whether to buy it at that point. Exxon's already paying a 3.1% dividend at these levels. You know, so what you're going to see, there's going to be good opportunities out here inside this correction. Let's go to, and it's going to be hard to buy. That's the bottom line. Let's go to David in Lakeland. Hey, David, what's going on?
Hi, Tom.
How you doing, man?
Doing good, doing good.
Good.
Got a question on the gold, which seems to be holding its price, but the miners are dropping. And it looks like they're almost headed to some decade lows.
What miners are we talking about?
Well, like GG and AEM.
Okay, so let's pull it up. I mean, they've been at these levels for quite a while.
Right.
They're all testing the 2008 lows, and they already rejected them.
Yeah, well, we had a pretty good run when gold, moved on up to, 1220, 1230.
No doubt.
So do the miners moving in tune with the general market going down? Is that?
They haven't yet, but okay, so what David's getting at, folks, is this, is that when we came down in 2007, they took everything down. Gold went from 1169 to 666. The miners got smoked just as the market got smoked. The correlation right now, that is not happening. But to answer your question, what is also not happening is that they're not getting traction, okay? Well, they're going sideways. So do I think they're going to get traction? I do. And the reason being is that let's go look at AEM right now. We'll look at a few of them, actually. So if we start with an Eco Eagle is at $24.28. It had first tested the bottom at that 22.20. It came off that bottom, has had a few nice signs of strength. You had a nice sign of strength. It went from 22 to 25 on November 14th, 4.1 million. It gets higher with 4.4 million up to 26. You had 4.4 million there. Then you pull back with 2.2. This Tuesday, we also had another sign of strength. It goes topside with 3.6 million. See how we're only pulling back with 2 million today? That's building big cause. I suspect what you're going to have is you're going to have a wide price spread, accelerated volume on the way up. Are they dangerous here? Yes, they are. I was having a conversation with someone yesterday because the danger, folks, is that when you're so close to the bottoms here, too. But I like the idea that they have had these signs of strength, and that's saying that they want to go higher.
Yeah, it just seems like they're not moving, and as the dollar coming down and the bonds going up and the market coming down, and that they're going the wrong way from other patterns.
Yeah, they're not going the wrong way. Inside of what I do in the art of time in the trade, they are going the right way. Now that doesn't, and what I mean specifically is this: they go up with wide price spread, accelerated volume. They pull back with lighter volume, right? That doesn't mean that you can't be nervous beyond belief, because we are at that. We are at that point, man. That's a reality.
Oh, okay.
I know. Listen. It's tough, man.
So when it gets to a point where it's looking at a new low, then you've got traders all around the world look at the same thing and wonder if it's going to get tested, and they go test it.
Well, I'm not worried about that. I'm not worried about that. What has happened is that gold is off the radar in an extraordinary way. If you watch CNBC, if you watch anything else, gold is off the radar. That is a great indication that gold wants to go dramatically higher. That's right. Everything. What's on the radar on a continual basis, of course, is the dollar, is oil, is the market in general. And just watch how that shakes out, because that is important inside the context of a contrarian type of play.
But
when
oil with its price going down does have a drag on all the commodities, doesn't it?
It has. I wouldn't say it has a drag on the oil or gas business, because the oil or silver or gold business, because inside the silver and gold business, the oil is one of the largest variable costs that come into mining. The second one is cement. So cement is a huge deal, folks. Oil is a huge deal. As oil comes down, the miners' expenses go down, and they go down, substantially. Now, you can't bank on that to have the gold miners go dramatically higher. What you want to bank on with a good gold miner is that they can get the rock out cheap on a continual basis, not just because oil has come down. Do you know what I mean?
Very good.
Cooking, brother.
Thank you.
Have a great weekend.
Bye-bye.
Safe weekend. You stay right there, folks. So we get the Dow on 275. They're gonna whack that 300 baby today. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my news. I guarantee your satisfaction for the next 30 days, unconditioned than being on the wrong side of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report, that's 14 months, for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. The Dow right now is down 295. You get NASDAQ off 50. S&Ps are off 26. And bottom line is that you'll see this selling just accelerate. No one's going to want to go home long. That's the first part. The second part is actually bigger, folks. And the second part really has to do with, I suspect, a bunch of these money managers. So when we take a look at the S&P, where it is right now, and you have to absolutely wrap your head around this. This is what you have. You had the first downdraft in October. You know, the downdraft in October got down to 1820. It took 3 weeks to get down there. We started the year off at 1843. Bottom line is that they're looking at that and said, oh, man, hold it. We can be back to 1843 in a heartbeat. Guess what? They're getting paid to basically make people money, not to basically go flat and then take the VIG out of the account at the end of the year. I suspect because of that, also, there's a million different reasons people are selling, but because of that, smart money managers are going to clean the tables right here, right now. Clean it up, because their risk is that their clients go downtown versus being flat versus being up 1%, 2%, 3%, whatever that is. Let's go to John in Massachusetts. Hey, John, what's going on?
Tom, how you doing?
I'm doing great, man. You having a good day out there?
Excellent day. How about you?
I am, thanks.
Hey, question for you. I wanted you to analyze the XLF for me because I want to see if I can play the FAZ.
Okay, let's take a look. So the XLF is the Financial Select Spider. The low is 24. No, let's see. The low for the year is 20. The high is 25. Right now, you're trading out at 24. You have the expansion right now. You're into a lower price. This is going to go after 22.26. So if we go over to the FAZ, now the FAZ, folks, is a 300% inverse correlation of the Russell 1000. This is one of the direction shares. They are daily investment vehicles. They compound on the way up and they get defensive on the way down. The FAZ is at 1391 and wants to go to 1843. So, you know, you're getting the juice in it today, has the volume in it today, has all the above. If we go back to, let's go BRK. So what happens is that BRK, well, see, what also happens is this. So watch this, folks. The FAZ is the Russell 1000. And I like that trade, John, specifically because of this. Yesterday, you know, we were talking about the larger banks hadn't got hit yet in this market. The smaller banks and the regional banks, however, have. And what you have inside the Russell 1000 is that you're going to have a lot of those banks. You're going to have a lot of banks that are basically out and down in Texas. You're going to have a lot of financial institutions that have something to do with the oil market that they won't necessarily be in trouble, but they will sell off because what folks don't know right now, folks, is that what is in the portfolios and specifically what I'm talking about, what is the debt structure and loan structure inside the smaller banks' portfolios, you know. And that, you know, that's going to be a problem with oil down at these levels, depending on how long we stay down at these lower levels. You know.
Yeah, I'm looking at it as potentially playing some calls on the FAZ.
Okay, have you done that before?
Oh, yeah.
Yeah, I know. They're beautiful, right? That's why I asked. No, I know. I know, man. And that defined risk is a good way to go. What happens is this, folks, okay? You'll pay a premium for them, but the bottom line is that when the market basically, you know, if in fact the market gaps down, and these financials gap down, the premium inside the FAZ goes to the moon. You know, on these options. I know they're fast, they're furious, and I think it's a good way of doing it because it is a defined risk. You know, so
now, my only problem is, you know, no one can predict the time frame, but I'm thinking about doing the Januaries on the FAZ. I don't know if I'm.
Let me see something. Okay, so 1 second, hold it. Get this calendar up in front of me for a second. Okay, so we're at the 12th. I wouldn't do the Januaries, man, because we have option expiration next Friday, man. What you could do is this. This is a tough one. You could wait till Monday, because what will end up happening, premium's going to get sucked out of this over the weekend anyway, no matter what happens. You know what I'm saying?
Okay.
You can wait till Monday. And listen, man, if they don't I wouldn't pay the big premium on the Januaries. I'd go to the 19th. I think next week's going to be a disaster, man. You know, I think
you're saying play the Decembers.
Yeah.
Okay, so in the front month, play the Decembers.
Yeah, because what's going to happen is that, first off, now, if this is a regular option, folks, I'd be pushing them out to January, okay? That's the bottom line. Because what happens is that you have price destruction that happens very quickly inside the option market as you get there. But that destruction can work for you, and because you're already doing a 3-to-1 leverage, now you're doing an option on top of that, okay? You know, the shorter that you can stay in that trade, the better off you are. Options are like dead fish. The longer you hold them, the more they stink.
Well, yeah, I like the open interest on them, too. I mean, the Decembers.
Oh, yeah, they're liquid, man. They're liquid big time.
I'm looking at the 15s. Okay.
Calls on the FAZ are like weapons of mass destruction.
Well, you got to have a quick finger, too. So.
That's a beautiful thing, man.
Yeah, a lot of fun.
Okay, man.
Tom, I appreciate your help.
Have a great one, man. Have a safe one. And listen, folks, okay, as you're over at TFNN, don't forget, if you are in the metal market, you'd like to be in the metal market, we have a great special that's going on right now of the Gold Report. You can get 60 editions for $600. What you also get is that you get a copy of my best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, and that will go out. As soon as you subscribe, folks, it goes out. If you have Tiger dollars, great place to use them. Bottom line, all of the above. Market out here right now down 280, NASDAQ off 48, S&Ps are off 26, and what you are going to have, folks, you're going to have a break of the swing point with volume. What does that set up? That sets up ABC structures down all over the place. That's the first part. Second part gets a little bit bigger. Yeah, we're man, what an expansion of volume on the SPY. We're already at 167 on the SPY. This is it. This is it, baby. A to B equals C to D. They're all over the place. Get your stops in, folks. If you're long and strong, just get your stops in. There's nothing wrong with being stopped out. And, yeah, bonds to the moon. There's no doubt about it. The 10-year, if you're looking for mortgages, folks, start getting those papers in next week, because what you're going to see is a 3.9. 3.9, hey, Mike, the 3.9 will be easy to get. Let's put it that way. That's some good money, folks. No two ways about that. Dow right now is down 290. NASDAQ is off 50. The acceleration really got going on the NASDAQ. It was kind of interesting, man. That leg the NASDAQ just took was a kind of an intense leg. You stay right there, folks. We'll be coming right back. Dow down 288 right now. NASDAQ off 50. S&Ps are off 27. We're going to be right back. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. This quote's by Walter Anderson. Believe in something big. Your life is worth a noble motive. And that's a fact, folks. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We have the Dow Industrials down 312, NASDAQ off 54, S&P's off 30, gold contract 1222, down 350. They can't whack gold. Dollar failed at the highs out here today, folks. On a weekly basis, bottom line, dollar's going to go down. Correct. We'll see if it's a normal correction or, in fact, wants to do something bigger. Gold, we're at 1222. Gold wants to make the run to 1256 and 1347. Silver flat out here today at night at $17.03. Light sweet crude. So check out crude. Crude's down 223. We're at $57.71. The way this baby's set up right now, folks, it's going into the highs of the low bar of 2008. That's where this baby's going. We'll see whether that holds that level right there. If it doesn't, if it gets into that bar, it's 54.62 to be exact, and right now we're at 57.70. The way it is trading right now, it looks to me like it's going to blow that thing away in about 2 seconds flat. And if you get into that bar by like $3, that means that oil's going to $32, which is really going to blow people's minds. But that's the way that's set up right now. There's nothing down below here to hold it up. That's what it really comes down to. And it's self-fulfilling when you get an expansion on the way down like this, okay, because it's so fast. Bonds are screaming that we are going to have much lower rates. The 10-year right now is at 2.0, I think. What could it be? 1 second. Yeah, 2.0. Bottom line, you're at 2. We're gonna be under 2 next week. You want a mortgages, folks? Bottom line, go out there and get them right now. Because what you do have, that's a 30 year is going to be running at 3.9 right now. And, you know, yeah, is it going to get cheaper? Yeah, it's going to get cheaper. But bottom line, at 3.9 for 30-year money, it's a beautiful thing. The 10-year is at 127.21. And you know what? What's game here, folks, is it could be a much larger ABC structure on the way up. The 8 point on this would be 122. Your B is 129, so $7 is going to get you into a 132 level. The 30-year, when we did this on the 30-year, so check this out, folks. The larger ABC structure on the 30-year. Hold on, Mark, you're going to love this one. This is sick. This really is sick, in fact, if this is what's going on. The larger ABC structure is like to $1.72 to $1.75. You know, we'll see how we end up hitting $1.53. But if that's the case, man, oh man, that is going to be like a total mind blower, no doubt. King dollar on a continuous contract closed under that high, and what that says, King dollar has done exactly what it should have done, meaning it went up, it tested the 2008, 2009, 2010 highs. It's closed this week at 88.32. 88.51 was the number. It's up. King dollar wants to pull back now to about $84. And that's a big pullback. It's a normal pullback in something that's gone so dramatically higher, but yet it is a normal pullback. Now, our markets go like this. Our markets today, you had the Dow down 1.7%, NASDAQ down 1.4%, and 1.1 rather, and the S&P is down 1.4. That's nothing, folks, compared to what Europe was down. Europe, the FTSE was down 2.4, the DAX was down 2.7, and the CAT was down 2.7. Next week, get your stops in. If you're long this market, just get your stops in because it's going to be one nasty market. What we have had done is this. In October, we took out the longer-term trend, and we took it out with a vengeance. Wide price spread, accelerated volume. Then what ends up happening? It failed. It came right back inside the longer-term trend, meaning when we came down to 1820, jumps right back on the other side of the line. Well, guess what we did, folks? We broke that again, and we broke it with wide price spread, accelerated volume. And, yes, you just did see that, I believe, one of the Tigers saying they did just cut France. They cut France from AA to AA from AA plus. Yeah, so they're cutting their rating in France. And now listen to this. This is how sick this is. The France right now, their 10 years at 0.8%. So it's like, oh really? If you think our rates are high, we're borrowing money at 2%. They're borrowing money at 0.8%. What does that mean, folks? Guess what? That means that rates are coming. What is that? We're almost paying 300% more. No, it's 250% more. Why would that be? That's right. Europe is toast. Get the cream cheese out. Let's go to Charlie in Framingham. Charlie, what's going on?
Hello, Tom.
What's happening, brother? You making money in that good old SCO?
It's been good to me so far. It's up 11%, and I need your help to know where to put the stop because you know how I feel about stops.
No doubt. Let's take a look at it. We get SCO. This is the ProShare Ultra Short 200% inverse correlation of the crude oil sub-index. The low is 24, the high 68, and that's today. You know, what I'd be taking some money right now, Charlie.
Okay.
I know this is what happens, folks. Okay, so picture this. If you trade these doubles and triples, right, they're outstanding vehicles, but you absolutely want to understand how they work, meaning they compound on the way up and they get defensive on the way down. Well, what happens, Charlie, and I believe you've traded these for a while, right? Yeah. When you get to a number like we have like right now, 68, right? Mm-hmm. When you compound on a 68, folks, or you're getting defensive on a 68, now today it went up $4, and oil was only down $2.50. Oil can bounce $5 in a heartbeat, and this will open down $8. You see what I'm saying?
Yeah.
And so these are wicked dangerous when they really get anywhere from $40, $50, $60. And, you know, do I feel that oil's going to go lower? Yeah. You know, but on the trade like this, man, this just went nonstop. Like, you know, let me see. If I do an ABC on it, it's 28, 38, 48. So it's $14. 43.50. Yeah. Listen, man, I'd take it. I'd take the money right now, man. You can get. Actually, this is pretty wild. It closed at 68.03, and someone's bidding 68.29. So, you know, they're bidding over what it closed at right now.
I'll do it after hours.
Why not, man? Then, you know, you're comfortable over the weekend. You know what I mean? And that's really, you're hearing a money management deal on that more than anything, Charlie. Do you know what I mean? Just because.
And I always can jump back in.
Yeah, you can. You can. And what happens, folks, is this. The bounce, you can get a bounce in a heartbeat, but when you're getting a bounce and you're dealing with either a 200% or a 300% inverse ETF at a price of 68, they will gap down $8, $9, $10 and take everything for you just like that. So you have to be prepared to get out early on them. And that's cool, man. You know, there's a lot of good trades out here that you're going to be able to do those kinds of numbers on. So, but you have to take the money. That's the bottom line.
Well, you're confirming what my gut told me, so
Good.
I appreciate it, Tom. You have a great holiday, buddy.
Hey, man, have a great one, Charlie. Have a safe one. Volume-wise out here, folks, what we did is this. You have on the NYSE, we did $963 million. You got an expansion in volume. That gives you confirmation there. On the NASDAQ, you did 1.874. That is close. We take a look at the, if you want to see something, is it Chevron? Check this out. This is pretty intense. Chevron, okay, that had broken out the October 15 swing lows, but when you put this on a weekly basis, it's breaking everything on a weekly. So watch this. This thing, these oil companies are just getting smoked, man. So we just broke down, the last swing point in October had 57 million shares. We blew that away with 62 million shares. So the next stop for Chevron is 96. You're at 102. That, you know, we'll see whether that holds. Where I suspect we're going to be going here is that you have a high volume low at 87. That's a monster. That's August of 2011. That's where this is going. And it's going to be a classic, folks. At the highs, no volume. You come off the highs with volume, you're going down to the last place that had any volume. Big number on the way down. You stay right there, folks. We'll be coming back with our tech expert at TFNN, our man, Mr. Dave White. Dow Industrials down 350, 54. S&P's off 33. We're going to be right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finish down 315, Nasdaq down 54, S&Ps are off 33. Bottom line is you got an ABC structure all over the place down. That is the smaller aspect, though, because what you have on a larger aspect is this. We take a look at this cash S&P, and what you're going to see is that the break that we had had in October, that was a valid break of the whole trend line that started at 1340 on the S&P, which is 13,400 on the Dow. It got down to the 1820, comes back inside the channel line, and now we just busted back into it. So bottom line, and you're busting into it, by the way, again with wide price spread, accelerated volume. You know, the S&Ps on the weekly basis, there's not many times that it moves 73 points in a week. That's what we had. That's a big number in a week. Dow Industrials, I think, let's see. Yeah, we're almost at 1,800. It moves like 700 points down. So that's a big number. So you have the wide price spread, you have the accelerated volume, all of the above. That is saying that the longer deal is going to be a much larger pullback. Now, folks, let's go over to our man, Mr. Dave White. Don't forget, folks, David does an outstanding show right here at TFNN every trading day, 1 to 2 Eastern Standard Time. Also has a great newsletter, The Tech Insider. You can test drive that right here, right now by coming over to our website at TFNN. Go to newsletters. You'll see the Tech Insider right there. You can test drive it 1 month absolutely free. Dave White, what's going on?
Well, it was a horrible year for coal, but I think that was a good year for Santa because now he's putting it in our stockings for all the traders apparently today. So we got a full stocking full of coal for them apparently.
I hope they get my fingernails back. I needed a few different pairs of fingernails, folks, but they grew back a little today, no doubt. And this week they definitely grew back.
Well, we were talking last week. I can't remember if we were talking during the break or during the show, and I was saying, boy, I tell you what, I was looking at that Shanghai market, and I thought, boy, if there's a bubble, that chart looked like it certainly looked like.
Listen, I talked about it yesterday on my show that you nailed that thing. That what happened, folks, is that Dave had said to me off camera. He says, "Man, that Shanghai, looks like it's going to be toast." And I had brought it up, and I brought up a swing point. I said, "Well, I think it's going to go a little bit higher first." You know what I mean? I didn't say first, but a higher swing point. Bottom line is that Shanghai went down 5% in one night, folks. No doubt.
And then we had Greece. It's been quite
Greece is down 10%. No, I know, man. It's
3 days. It was down 20%. So yeah, it's we've got a lot of movement out here, and normally you don't get that in December.
You don't.
And I guess it's nice for us traders, but probably a lot of people probably thinking that for the most part it was over this year. And even I thought for the most part there was a little bit.
And it's not. It's only folks. If you're long this market, just get stops in, okay?
Well, I was going to say it doesn't matter whether you're long or short. I could see some massive volatility on both sides going into this week. So that if you are short, you may want to make sure that you keep what you get with having your stops on the short side too.
I understand that. What I'm talking to Dave though is really the longer term investor. Okay.
Oh yeah.
That's what I'm talking about, because folks, the run you've had has been extraordinary. Okay. That doesn't happen, okay?
Well, the Tech Insider is my longer-term investment newsletter up on one of the stocks that we've been talking about. And one of the differences between the daily newsletter and the long-term newsletter is I like to have both a fundamental and a technical setup on it.
Right.
And I think I got a gift, but we went out in April puts on it because I have a feeling that we got just lucky. We got the gift. And it was worth, I think the stock's already down $3 or $3.50 or something. So I think we got a gift on Wednesday on it, but I'm still looking at some other ones out here, maybe before the end of the year to add some new positions. But I think we've probably got at least one, and I think we've got 3 or 4 others that I've been talking about. And I think those positions will set up maybe by the end of the year and the first week of the year for some fairly long ones. But it's been a while since I've gone out 4 or 5 months and in options. Yeah.
Now, we have a slide up here. It's saying Autodesk. Autodesk. Talk to me about what Autodesk is doing. This is pretty cool, folks.
It is. Basically, there was it's not new in the industry. In fact, in the 80s, Apple was real big at trying to get Apple PCs in schools.
Sure.
And this basically the same thing. Autodesk is basically now saying that any of their products, if you're in an accredited school, they will be able to give you free access for all the teachers and the students while they're in there. I know several people that actually have kids that have already signed up on this. Now, for the most part, it was just the U.S.
And what is it?
It's all their suite of software. They've gone to that cloud-based system now for distributing all their software. And if you buy it retail, it's like $60 a month for everything that they have. They've got about 5 major products. And I know you use a couple of them at TFNN. But they basically have all the products, and they're always updated every month, and just automatically downloads the new versions, kind of like if you have an Android or a Apple phone. It just automatically is always updating the software to keep it up to the latest version. But the big difference was that they'd done it for the U.S. market, but now they're going internationally. So literally everybody across the world, if you're accredited, which ends up being about 500 million students across the globe, will be able to get free use of their software. And, of course, the idea is if we teach them to use it now, it's incredibly hard for people to switch software and get new features. They get stuck in it. Yeah. In fact, one of the first things I learned in software was probably had to be around 1985 or 86, but the then CEO of Electronic Arts said it was the baby duck syndrome. Whatever someone sees for the first program or the first way it looks, everybody always thinks that's their mother, like the baby duck, and it's incredibly hard to ever get them to change. And if you're first to the market and you can get that market share, that's why so many companies are out there are always fighting to be first and make it free. And
what exactly does Autodesk do? What type of software? What does it do to help people?
Well, basically everything from some of the commercials that you are actually running on TFNN to the AutoCAD software to desigin buildings.
That's what I thought.
So
that's what I was asking. It's the CAD system. I got it. Yeah,
well, that's part of it, but they also have all the other products to create special effects, titling, all the other stuff that's available. But they've got a whole suite of stuff, but probably not a bad idea. And interestingly, they have this set up on the cloud, so as these kids finally graduate from school, they can turn their software off, and hopefully they'll buy it after they get used to it. That's kind of the try it and buy it. Or at least when they go to a company, they'll go, well, do you know what I want? Oh, yeah, I already know, right?
Sure.
So the kind of a self-fulfilling prophecy, but kind of interesting to see that Autodesk has done that with software where you kind of saw Apple try giving away iPads in the LA school district, and that kind of blew up in their face this year.
But when Apple, years ago, they gave away those Macintoshes, and that made Apple, right?
The Apple IIcs and Apple, before the Macintosh, are lower end.
Right.
Apple products.
Right.
They did, and really never went into Macintosh.
You stay right there. We're going to come right back. This is Tom O'Brien, Dave White. Our phone number is 877-927-6648. Dow finished down 315. Nasdaq off 54. S&P's off 33. We're going to be right back, folks.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow finish down 315, Nasdaq off 54, S&P's off 31, and inside the Dow, the leader down at on the way down was IBM, folks. IBM broke down. It's been building cause for a month. Blew by the B point, has juice behind the move. The bottom line is that you are at 155.38 on Big Blue, and that Big Blue's making its way to 116. This is going to be a disaster for Big Blue. 116.80 is the number. It sliced right through this 157.13 area. So it's going to be wild kind of watching how this whole thing shakes out. Inside the Dow Industrials, what we did have out here today is that Big Blue is the leader on the way down. That was down 560. Dell was down 228. Exxon was down 260. Merck was down 162. There wasn't one Dow stock that was in the green. Walmart was the closest one. That was only down 2 pennies. We're talking with our man, Mr. Dave White, our tech expert at TFNN. And the slide that I'm looking at right now, it's good old Apple has ordered the first round of parts for iWatch. The interesting thing, the amount, only enough for 4 million iWatches, Dave.
Yeah, there's been a lot of discussion about how Apple will have comps for next fall, right? The discussion from the pundits has been, well, they're going to be selling, 100 million iWatches next year. Now,
100 million iWatches. Oh my God.
I mean, I heard that in the fall, right?
Yeah.
Yeah, but now people have kind of had a chance to come down from the clouds, but the reality is they're not going to make any more than they order parts for.
Right.
Now, Apple is the proverbial elephant going into the pond. They can't order 4 million units, still real good for most companies.
Sure.
Just not good for them. The downside also is that they're talking about a $350 retail price for the iWatch.
Okay.
They get about $700, $720 for the i6 Pro, the big one. So not only do they get that, but of course they get the sales of music and anything else off of those too, or at least a taste.
Yes.
So the interesting part is whether or not the iWatch is going to make up, especially next fall and next year, for what is almost certainly kind of a nice pop, finally, with a nice-sized or large-sized phone out there. And I think a little bit of Apple's weakness today was pretty much the scuttlebutt going around at least the Asian markets about how many units that they were going to sell or order parts for. Now, part of this is that the Chinese take vacation in late January. So if you're going to do anything, this was about the last day that they could do it and still miss the 2.5 weeks that China is down to manufacture these products. So it's telling us that I don't know if they just don't think that they're going to be a huge amount, or they may think they may get something wrong, but they ordered enough parts probably to build these things before China goes on vacation.
Sure.
And then when they come back, maybe we'll get a better idea if they're ordering more parts, or because my guess is, go ahead.
No, when we look at Apple, too, Apple's trading 109.73. You know, you had an expansion of volume today, did 55 million. And, you know, it looks like Apple's set up for at least a test of the 103 mark again. That's where it broke out of. So, you know.
Yeah, that 103, if I remember right, I'm looking at your chart, but everything kind of above that looked to me like a false breakout because the volume never actually ever came in.
No, it didn't.
Great many charts actually do look like that. I was talking about it on my show today about a lot of the semiconductor stocks that kind of broke out, but today came back into the trading range, but never really had any volume past the breakout side, you know, 2 weeks ago.
Yes.
They were kind of fooling around up on the high side, but not a lot of energy, no signs of strength, that kind of stuff. And it's going to be interesting to find out what we see in the next round of these big funds, if any of them were sneaking out the door.
No doubt. Now, what's the next slide we have, Dave?
Don't know. Here, hang on a second.
I'm looking at iWatch. I'm looking at, here we go.
Did I have something? It looks like I missed something here. We have that. There we go. Hang on a second. There we go. Cortana.
Cortana. So what is that?
That's like the Siri thing for Windows phones and the Windows devices in the future. But Cortana.
Well, listen to this, folks. This is sick. Go ahead. This is wild.
Cortana has been built on something I've had for about 2.5 years that I use for my models in trading. Microsoft has a division that's called Microsoft Research.
Yes.
And they've been working on a long time on a statistical engine to use on websites and to also use for going through data and seeing what happens. So what they've been able to do is go back through things like Twitter feeds and newspaper articles and people talking.
Yes.
And from that, they glean who and what and odds from football games.
Okay.
Well, for this year right now, they've gone through a bunch of different games. I think not only football games, but others. But they're basically 126 to 66. So they're about 65%.
That's good.
Picking football games just from going through big data and seeing what people are saying about the football teams and other things like that. So the whole big data thing is a big deal.
Yes.
In fact, we had 2 huge IPOs today from big data. I hate to even bring them up because I know people are chasing them, but just about every one of those big stocks that people chased, like GoPro, everything else are right back to their IPO levels. GoPro, of course, having its lockup on December 23rd. You're going to have another 120 million shares available that day. You know, what do you back down 35? I didn't even see how it closed today.
Yeah, it closed at 60. And it was up, folks, all day. And now what GoPro just did, let me see. So you have 48 million. You know, it broke its swing, not with volume, but you're coming into 61. I mean, this is going to go, oh, man, look at this. This is what GoPro wants to go to $48.
Yeah.
Interesting.
And of course, that's without seeing the effect of 120 million shares coming to market the 23rd of December.
Yeah.
So, you know, I think people are foreshadowing it, but a lot of these stocks, when you go back and look at all of them, if you want to pop up LOCO is another one. That was supposed to be the next Chipotle.
Look at that. Down from $40 to 22. Holy cow.
Yeah, all these IPOs, if you just go through them, I'd say 80% of them look like GoPro, look like Loco, look like all these other ones. We had a lot of them, and even today, LC is another one, which just
Lending Club, yeah.
Yeah, just went up. I mean, these things are still popping out with huge numbers. So it shows me there's still a lot of gamblers in this market.
Oh, yeah. There always will be,
They know that almost
there
all
always
these,
will be. Yeah.
Yeah, well, there always will be. But pretty large pops for these stocks right out of the gate. And most of those are because they are putting out very few shares to trade.
Yes.
And then, of course, like we always say, the business of Wall Street is to finance businesses, not make you rich. And they do that by pushing out paper. And all these stocks, including the ones coming out today,
yes,
very hard for me to see that they don't at least come back to their IPO level. And maybe at that point would be a much smarter and probable profit if they go sideways for a while, consolidate, you see the lockup come out, and then you have an opportunity to maybe more intelligently play those.
No, there's no doubt. And, you know, what does happen with long runs like this in the marketplace, though, folks, everyone thinks that, you know, this is it. This is easy money. It's going to be made fast, furious, and the sad part is that that's when this thing always just goes the other side, you know. You know what I heard? So check this out. I heard that, and I really like this guy too, but, you know, this is the death keel of the Dow 12,000, I mean 18,000, that Art Cashin had taken out on the floor in CNBC. He'd taken out an 18,000 hat, right, 12 points before it hit the 18,000.
It was close enough.
I know, that's just intense, though. Isn't that crazy how that works, though? Folks, what are the odds that that's how that works? And let me tell you something. You know, Dave, we're at TFN, we're in this market so dramatically. Even when the market's going down, I always try to zip my lips, because intraday I'm talking about, because if one thing you say, okay, here it goes, guess what? It goes the other way. And what are the odds of that, right? What are the odds that as soon as you open your mouth, it's like it goes the opposite way? It's like crazy, man.
It's not wise to shake your fist at the trading gods.
No, it's not, man. It's not. So, look at this. Google's planning to close its Russian engineering operations amid Russians' internet laws that can see other tech companies leave the country. The internet search giant is closing the department, but will offer close to 100 engineers, most who work in Moscow, new jobs. And, hey, check this out, folks. What's going on in Russia right now, too, today, as we're talking, and it's going to be interesting if they get this thing through. Well, Putin can get anything through he wants. What they're thinking of doing is that they're thinking of making all Russian companies to transfer their foreign currency into rubles within 10 days of doing business.
Das Vidanya.
Oh, that's a big number, man, because that's what happens in South Africa. And guess what, folks? It doesn't help the currency, but it croaks the companies. Yep. You stay right there, folks. Dave White, Tom O'Brien, we're coming right back. Dow finished down at 315. NASDAQ off 54. S&P's off 32. We're going to be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien. Welcome back, folks. And folks, as you're over at our website at TFNN, you're going to see right on the top in the carousel 60 for 600. What that's all about is that the Gold Report has its 660th edition this coming Tuesday, 12 and a half years, almost 12.3 for 3/4 of years, actually. We're doing a special that is only $10 a week for 60 weeks. That's a half price. What you also get, if you decide you want to take advantage of that, is that you'll get an autographed copy of my book, The Art of Time in the Trade, which is an $88 value. So if you want to give a book away for the holidays, get a great deal on the Gold Report. If you happen to be in the gold market, silver market, if you have Tiger dollars, all of the above, you have 7 days from today to take advantage of that. Check it out on the front page of TFNN. We're talking with our man, Mr. Dave White, and the slide that we're looking at right now is the Consumer Electronics Show. So CES is on January 6th to the 9th. And, of course, a lot of these high-profile companies either say they are not going or they don't have much to show. So it looks like it's going to be the 4K TV year. Amazon said it's going to start distributing 4K video, Dave, huh?
Yeah, it looks like a quiet consumer electronics show. At least a lot of the bigger guys are already saying don't expect much from us.
Okay.
A lot of the smaller guys, which are like the Internet of everything kind of people,
yes,
are probably going to be the big things that we see out of the Consumer Electronics Show. So it's probably not going to be the big companies. It's probably going to be the smaller companies.
That's pretty cool, though, right? Really, when you think about it. Yeah.
We've talked a lot about the other company that had the electronic locks that
right.
you could undo, and I thought you'd be interested in this. Sony's got a new one, and it's the same kind of thing. It's a automated lock that you can use through Bluetooth and wireless and that kind of stuff. But they've got a very interesting way of distributing the encrypted keys via messages apps like Line and Facebook.
Wow.
So that you could actually give your key, you could put it on Facebook for somebody.
Okay.
And send it to them via Facebook, and they would have their key.
That's amazing, man.
We start seeing this whole Internet of everything, and we talked about how Bluetooth was being enhanced to work with that last week. But it's it looks like to me like it's a fairly big thing, and we're probably going to see not one huge thing come out of Consumer Electronics Show other than a lot of 4K televisions. And
now,
the prices are following on those.
Yeah, walk me through how the 4K works again. So, meaning that does it have to be made in 4K in order to listen to see 4K too? How does this work?
You could put a 4K signal into a smaller TV through HDMI, and it would know that it was only doing 1920 by 1080.
Okay.
But if you plug something in that supports 4K, it's going to know it's I think it's 3980 by a little over 2,000 pixels. So
that means the clarity's even better, right?
Well, you got 4 times the pixels. So
4 times the pixels.
Yeah.
Holy cow!
So each time they move these things up, it's basically squaring the amount of video. The question is, if you see something that's professionally lit, like a movie,
yes,
probably worth getting 4K. If you're talking about looking at me through Skype like we are now, probably not a big deal. But for the high-end video home theater crowd, it's kind of interesting. Now, I signed up for,
and the prices have come down dramatically, right?
They have. I just don't know how well they're going to be able to distribute this high-res video, because I had problem with regular video. I signed up for Prime on Monday for Amazon Prime to get my free shipping for all my Christmas presents.
Okay.
They give you a 30-day free trial.
Yeah.
So I did that. But I tried playing their video back, and without buying their specific device, it doesn't work all that well.
I see.
So I was having just problem, and I've got a huge honking connection here with Fios. I have basically the business Fios at home.
Right.
And I don't have any problem with Netflix or any of the other streaming sites. Amazon, kind of. And I was kind of disappointed about their support for video, but what can you say?
Yeah, it's only $79, right? For the year.
Yeah. For the year.
Amazon, folks, if you haven't tried Amazon Prime, it's one of the best deals out there.
And you got 30 days free, so if you want all your Christmas presents shipped 2 days without a charge, you can go for the 30-day trial from them.
I know, man. That's pretty intense. No doubt. No doubt. Well, listen, man, we appreciate you growling and prowling with us out here. Folks, you can come over to our website at TFNN. You can go into newsletters. You go into investment newsletters. The Tech Insider is right there. You can test drive it 30 days, absolutely free. Don't forget, Dave is on every trading day, 1 to 2 Eastern Standard Time. All the
2 to 3.
2 to 3. I'm sorry, man. How can I forget that? Right before me every day, man. It's a beautiful thing. So we got a week left of trading, basically, right?
We certainly do, and of course, like you said, volume is probably going to be dried up by Friday.
Yeah, right.
We've got expiration this Friday, so I'm expecting some fairly decent volatility. Like I said, both up and down. Saw a lot of charts that had just been beaten up forever, actually having fairly light volume down. This looks like the second charge of a lot of the bigger stocks, like you talked about IBM having a bad day. You're
bringing up a great point. Now, watch. It's going to be cool to watch how this shakes out, folks, and this is why. When you get a downdraft like we have right here, the extension on the way down, like Chevron right now. Chevron should stop on the way down, but my take, Dave, is that it's not going to. And that is going to give you a further heads up that this thing is going to be more severe than anyone thinks. And the reason being, see, if we put Chevron up on a weekly basis, it's almost finished its ABC structure on the way down. You're at 102, and A to B equals C to D is like 101 something.
Yeah, I was looking at some of the other ones that weren't probably as big as that, like CLF, Cliffs, Naturals, and some of these horrible stocks that are just in horrible businesses for the entire year, not just lately.
Sure.
And earlier today, the volume, it just hasn't broken through these previous lows with a lot of volume.
No.
There's a lot of those stocks, and like you said, now it's the rotation to the leaders, to those generals that normally don't go up the hill first, but they a lot of times don't come down the hill first either.
Good old Joe Granville, right?
Yeah.
And Joe Granville, folks, he passed away this year. Great guy, great market technician, and it was always a pleasure interviewing him because it was always the generals, right? The generals, and it was so true, man. Do you know what I mean? And what happens, folks, is that when the troops basically, get out of the way, the generals run, and they run big time, folks. There's no doubt, man. Amazing. Well, listen, Dave, you have a great weekend, safe weekend. Of course, I look forward to the show next week.
You bet. We'll see you then.
Okay, man. Have a great one. Have a safe one. Market-wise, folks, bottom line, get your stops in. Get your stops in. Keep your stops in. That's a big number. And always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it. Take ownership of it and fly with it. Thanks for being here, folks. Have a great weekend, safe weekend. We look forward to speaking right here next Monday. Wow! Go get them, folks.